I really think that.
Hey guys, again. It's nice to be here with you all. I'm going to talk a little bit about my own personal story and how I came to real estate, and a couple of things I'm doing, and also kind of my personal philosophy. In case it's useful, hopefully it's at least encouraging by way of counterexample, perhaps. So I called this little 5 or 10 minutes I'm going to talk the ancient art of building wealth, because I think real estate is the ancient art of building wealth. And I'll tell you a little bit about why I am qualified to claim something as the ancient art of building wealth in a second. So why don't we go on to the next slide. So just my history as a real estate investor, my wife and I really got started we were living in San Diego, and she got pregnant, and we were like, oh God, we're gonna need more room. So we were living in a small, like 1.5 bedroom little place in Pacific Beach, beautiful, just so close to the beach, gorgeous. And just like the whole apartment complex we were in smelled like weed all the time. So we were like, this is not the greatest place to raise a toddler. And so we decided to move up, and we were renting, and I'd been thinking, gosh, maybe we should invest in a property. And I didn't know anything about real estate. And so I thought, I kind of started looking at some of the numbers. We knew an agent, and I wasn't really convinced that it was going to be the best investment. Just when I started understanding an amortization table, I was like, actually, you're not really building that much equity at the beginning, are you? But I thought, well, at the very least, we probably won't lose a lot because we weren't sure how long we were going to stay in town. And so I thought, well, at the very least, we'll learn something by doing it, and maybe that will lead to more opportunities that are difficult to put a price tag on. And turns out I was right. So I'm really glad we took that leap. We got our feet wet with a condo in the north part of the county, and ended up staying there for like 20 months and made like $20,000 on it. Not a big deal, but it was really exciting for us. And I started reading books around that time. Rich Dad, Poor Dad, Millionaire Next Door. And I kind of really got interested in real estate investing as such in around 2018. And so, I don't need to talk a lot after the last presentation about how California turns out maybe it's not a great place to start real estate investing, especially for buy and hold, which is what I was really interested in doing. And so, we had lived in a bunch of places before moving to California in 2016, and I started looking around, and I realized that Texas was actually a good place to invest in real estate. To my great surprise, I'm from Houston, and I went to school in San Antonio. So the first property I got was about 1.5 years ago. It was a turnkey property. I just found out about turnkey investing online. I was like, oh, this is a great way to get started. So we found a turnkey single family home in Houston. After I invested in this property in Houston, I kind of raised the question, well, is Houston really the best place to invest in real estate in Texas? I got into this since I was investing from San Diego, and actually got a job that summer in 2019 in Fresno in the Central Valley, but also the prospects didn't look great there. So I was kind of in this position of like, well, if I'm going to be investing not in my this current home state, well, why not invest in anywhere in Florida, Georgia, Austin, Dallas? And so I was kind of at this question of, how do you pick a place? And even though I was already kind of invested in Houston, I wasn't really sure that it was the best for me. And so I think I ended up looking around and got really interested in San Antonio as a market. It's all the big Texas cities have great growth, great appreciation kind of at the citywide level. You can find deals in any of them. Austin's very expensive, and it's harder to get the numbers to work for buy and hold cash flow investing, which is what I was interested in doing. And being from Houston, I just thought Dallas is a terrible place. And so I just didn't want to touch Dallas just because of my own kind of irrational bias against Dallas as a Houstonian. And even though Houston was, the numbers look good in Houston, it's one of these mixed markets where you get strong cash flow, strong appreciation. It was kind of intimidating for me because it's a gigantic metroplex and I kind of know too much almost. And so I started looking at San Antonio, which is, leading the nation in population growth, and it's an MSA of well over 1 million people. And I, of course, gone to college there, and so I kind of knew enough to have a feeling about some neighborhoods, but not enough to kind of paralyze me in a way. So I could kind of be a little more objective with the numbers. And I was actually, it was my first kind of non-turnkey experience. I connected with a real estate agent over Bigger Pockets, it just turned out I don't think that this is anything that you can't count on this sort of thing happening. But he was the first guy I contacted, and he ended up being just a gold mine, just a great agent who specialized in small multifamily. So I kind of listened to this advice that Brandon Turner talked about on the Bigger Pockets podcast of, the stack where you start with a single family, then you try to do a duplex after that, then try to do a fourplex after that. And so I ended up having that as a goal and hitting that goal. When I was looking for small multifamily in San Antonio, I was looking at trying to get cash flowing properties in the 150 to 250 price range. And I didn't care too much about how big the cash flow was because I had an income from my other jobs. And it was more about kind of learning by experience and getting like good long-term appreciation, going into places where I saw growth potential. And so I was investing kind of closer to the center of downtown, much like in Houston. San Antonio's downtown area is kind of experiencing this renaissance, and property values are just really rising quickly. And a lot of people are moving from that suburbs into the center. And now that COVID has struck, I'm not sure that that's such a solid strategy anymore. And I have kind of pivoted, so we'll get to that in a bit. I also started investing in syndications because I got really curious and started listening to all these podcasts, reading books, and finding out all these ways of getting into real estate. And I found myself at in the position of helping my father out with his retirement. And so I learned a lot about, kind of Main Street versus Wall Street investing strategies and how to maximize your retirement fund and things like that. And I think that that's just such an important thing for real estate investors to understand is how to tap into your 401k, or as the case may be, your IRA, self-directed IRA, or as our case was, a defined benefit plan. And I'll speak about that in a sec. So we invested in a few syndications in 2019, at the smaller scale at first. Found them through CrowdStreet, one of these online investing, syndication investing websites, which I still like and I still use. So that was the kind of diving in year for me. In 2020, I really, I was really excited when I got my first turnkey property, and I was really excited when I got my first couple of small multifamily properties in San Antonio, and really glad that they're cash flowing and I haven't had any big issues and they're well occupied. But I have big goals, and I realized that if I wanted to achieve them, I couldn't just be satisfied with. For me, I didn't want to be satisfied with kind of like retail level real estate investing, because I do want to replace my income and not retire early, but achieve a financial level that will allow me to do really different off the wall things in my 40s. And so I've been trying to find a niche, and so I've started researching this other form of real estate investing, residential assisted living, it's often called, in this model, you can convert a single family home into a senior assisted care facility. And there's really attractive returns, and I'll talk about that in a second. So I'm actually in escrow right now to buy a portfolio of 4 of these small assisted living houses. So I'm really excited about that. That's kind of been my journey, learning, first of all, to kind of reject the diversification perspective that you get from so many kind of investing advice books and tip collections. I've heard it said that in real estate investing, diversification is diversification. You want to pick a niche and get really good in it, and not that you have to stick with it forever, but you want to hone down and because so much of what real estate investing, what makes you successful in the long term, besides appreciation and equity building, besides the numbers part, it's the relationships you develop and your access to good deals and your access to good people that you develop by kind of sitting in a place and just camping out, so to speak, in a niche for a while. And so I'm working on doing that. Professionally, I did a PhD at one of those fancy institutions, and it wasn't the kind of PhD that transfers transfers well to industry, like chemical engineering or neuroscience or something cutting edge like that. I'm actually I was an ancient historian, so that's why I know something about the ancient art of anything. To be specific, a classicist. I studied. I specialize in Greek philosophy and the history of Greek philosophy, and my research was on mapping the intellectual networks of philosophers, Greek philosophers in the Roman Empire. So I enjoyed that very much, and I never really thought I would make a career of being a professor. And but once you get into the game, you kind of get railed into this one career track, and so it took me a couple of years of being a professor to realize that I love the subject and I love studying, and I even love teaching, but I just didn't like being cooped up in an academic job. And I had a permanent tenure track job at Fresno State, and it was great. But I think that there's a lot more opportunities for entrepreneurship and education, and not just in business education and science education and tech coding education. So many cool things coming online that you can learn all of these amazing, useful skills without having to go to a 4-year college. But I think you can also do that with ancient history if you want to learn it, classics, ancient languages. And so my passion is trying to find a way to build financial freedom so that I can try to do something in that space with more kind of business skills and more kind of capital at my disposal. So that's kind of my why, and I think it's really important for any real estate investor to have a why. So anyway, on the side, I worked in technical sales in the industrial coatings industry. That's actually my family business. My dad is the founder and president, and probably going to retire soon. So I've been working in that company for about 6 years, and that's given me a side of industry. And so I recently quit my job as a professor back in April, and I moved to Houston to focus on building the business on the one hand, my full-time job, and then real estate on the side where my investing had started. So that's me in a nutshell. And my philosophy that I kind of want to talk about today, with what little time remains, is partner with the right people and learn by doing. So that's been the thing that's carried me through. So next slide, please. So how do you find it being, the properties that you're looking for, and the deals. The deal is the kind of the heart of what we do. And my answer is very simple. It's relationships. That for me, it has been the best deals have come through finding the right people and trying to do more with the same people. And I've found some good people. I mentioned the agent that I started investing in San Antonio with, And he's the one who brought this portfolio of residential assisted living properties to me. Even though he's not really in this space, he's just a very well-connected guy, and knows a lot of multifamily investors in San Antonio on the small multifamily scale. And so it was through cultivating a relationship with him really over the past year. And, when I was be in town, I took him to lunch, and I would walk a lot of properties with him. And, the only properties I bought with him were a good year ago, and we've just kept it up, and we've looked at a lot of deals together, and he knows that I'm serious. And so when he finally brought this deal to me that he heard about through a client of his, I was one of the first people to know. So that's what's worked for me. Obviously, you have to learn about how to analyze properties. You have to, get kind of good with a spreadsheet, and you got to look at a lot of them. You got to be tight with your criteria. There's a lot of mechanical things that you can learn pretty easily from webinars and YouTube videos and books. But I've gotten really good results from partnering with great people. So the next slide, please. How to fund it. I've spoken about retirement account being a big part of my my personal investment strategy. And there's, this is really important and really hard. And I don't know if anybody's struggled with this, but there's not a whole lot of people. There are people out there, but for me, it was difficult to find good answers about how to use retirement accounts for non-traditional investments, how to say invest in a syndication through a defined benefit plan, which is a qualified retirement plan. And what is a plan administrator versus a plan a third-party advisor in a defined benefit plan or a qualified retirement plan, and getting everything right was really, I learned through mistakes. And so I'm happy to share with my experience if anybody's struggling with that. And also, for us, the way that we've funded a lot of our investments is through the tiny family business that we have, which, so you gotta, I think it's very tempting for me when I see the gains that I could make through going full-time in real estate. The grass always looks greener, and I think, oh, it'd be so easy if I could just kind of quit my job and focus on this full-time. But I'm actually trying to lately just be satisfied with the fact that I have a pretty solid income. And so I'm trying to take the advice of don't rush into things, and don't suffer from the grass is greener phenomenon. So last slide, I'll just talk briefly about why I'm interested in senior residential assisted living. Obviously, senior housing is a huge up and coming and an already here niche within the real estate world. Obviously, we all know about the big box kind of large senior living places that vary greatly in quality from bottom of the market to the top of the market. And it's often called the silver tsunami of seniors hitting the housing market. 10,000 baby boomers turning 65 every day, 4,000 turning 85, and 85, that's kind of the range of people that are looking for the kind of property that I'm investing in. And like I said, the basic idea here is, there's a few ways that these residential assisted living houses work. And there are some pretty good promoters out there that can tell you about this. I found out about it from a Real Estate Guys podcast back about a year ago. And just because of the economics of it, that I'm still trying to understand, you can either, as a landlord to a residential assisted living company, you can take a passive role at, basically you're just a landlord. You're not managing anything more than you would be if you were just managing a normal property, and get a higher rent kind of higher monthly rent. For example, one of the houses that I'm buying in this 4-house portfolio is about 300 appraised value, just appraised, just a normal single family home, builder grade, and a pretty new construction neighborhood. Not a lot to not a very impressive property otherwise. Market rent would maybe be $1,900 to $2,100 a month, but it's not a strong rental market for this level of property. I mean, if you're going to be paying this much per month, you might as well buy a house in the area. So it's not a really strong rental market for single families. However, with the current contracts that are paid by the operator of the residential assisted living business in the house, they're paying the current seller $3,000 a month. So at $2,100 a month, you would be just about breaking even as long as you didn't have any maintenance issues. But at $3,000 a month, you're cash flowing something like $1,000. So that makes it very attractive. There are people who take a more active role in the business and who run and operate these houses. Maybe they own the property and they manage the business inside. They find somebody to manage it for them, and then you can get much more per month. But that's a very active kind of model that I'm not ready to jump into that right now. But I think the challenge with finding these kinds of investment properties is it's a niche, and I think that's one of the reasons why the rent is higher than average, because you need a special kind of property, wider doors. You have to have a bathroom off of every bedroom. For instance, it needs to be laid out in a certain way. It's pretty specific. But with a new construction neighborhood, that such as that are going up around New Braunfels, Texas. By the way, New Braunfels is on the I-35 corridor between San Antonio and Austin. So Texas is like a triangle with like Dallas at the top, Houston at the bottom right, San Antonio at the bottom left, and then Austin kind of in between San Antonio and Dallas. So New Braunfels is about half an hour from San Antonio on the way to New Braunfels. So in this area, I don't know where I lost my place, but basically you have to find the right property. There's a lot of these new construction properties going up, and you can kind of, if you catch it at the right moment, get the builder to build it to spec. A lot of people build these properties anew. Currently, you can only have 4 beds in one of these houses for seniors without having a license. If you get a license, which is a lot more regulations, you can get up to 8 or 16. You can get up to 16. I didn't forget the 8. But you need a really specific kind of property for this kind of thing. So the challenge is finding the right property and then finding the right operator. And so if all goes well, this current deal that I'm looking at, the operator is already in place. It's the same operator for these 4 houses, and it's actually the seller did not really intend to sell. He is an airline pilot, and he built up this portfolio over a few years and got furloughed recently and needed the cash for another deal. And so he decided that he should market these. And so it's kind of like a turnkey opportunity for me. So I'm really excited about that, and excited to find the problems that I'm not foreseeing in all of this and learning from my mistakes. But so once again, the answer to finding the right operator has to be, relationship building, networking at residential assisted living conferences, maybe at masterminds and real estate meetups like this. So thanks all for listening, and it's great to meet you all, and happy to talk more about this and hear about what you guys are doing.